watching a home broadcast of Business World Live. I'm Danie Laurel. It's 10:30 a.m. here this Monday morning in Manila. We are about an hour into the shortened trading day. It's the first trading day of the week. Let's go straight to our banner story. The additional tariff on oil is taking effect this week. That's as the government looks for other revenue sources to fund its COVID-19 response. President Rodrigo Duterte signed last May 2nd an executive order which temporarily raises duties on imported crude oil and refined petroleum products by 10%. The Energy Department expects petroleum prices to reflect the impact of higher tariffs. However, the Energy Regulatory Commission, or the ERC, says the increased duties will not automatically reflect on power bills. That's because passing these charges on would first need approval from the Commission. The ERC says power generators may just absorb the additional costs from the increase in fuel prices. The Philippine Electric Plant Owners Association says the added tariff may only affect the cost of transporting coal, which is used by power plants. Since May, fuel prices are seeing an upward trend that's on the back of the rebalancing of supply and demand in the global market. Now, speaking of oil, remittances in March forced through banks dropped by 4.7% to $2.4 billion, with the Bangko Sentral saying the countries that registered declines. Remittances were mostly from the oil-producing countries such as Saudi Arabia, where demand for workers was affected by the depressed oil prices in the world market. There's a lot to be digesting this week, but I'll bring out my terminal here. Let's kick off with those crude oil prices. This is WTI crude. You can see it actually down by $1.08 per barrel. It's trading at around $35.18 per barrel. This is still actually down 42% year to date. It had slid dramatically already last week, especially on Thursday. And just, to reflect how the news on the whole global economy is actually penetrating the oil markets and the demand for energy across the globe. And I also want to show just one other haven asset, and just to highlight here how there's so many movements from equities into commodities such as gold. I'm just going to try and pull out for you whether we can actually see gold as one of the movers here. I had seen that earlier on. It's actually there. You can see that it's actually up by 0.09%, trading at 1,732 levels for gold. That is actually the first weekly gain we have seen in 4 weeks amid a flight to safer haven assets. Now, I do want to point out our local currency. This is, of course, very much related to oil, and also let me just take my screen for you. It's just very problematic right now in terms of technology. Let's try and take that out here. There you go. Okay, so you can see on my screen here how the local currency is actually back hovering at 50.254 to the greenback. That was actually also heavily affected by the remittance drop, which I just mentioned earlier on, and oil prices. We had already been trading at 49 levels earlier on last week, but just to highlight this, we are actually not that bad. So I'm going to pull out for you a chart here, which is the World Currency Ranking System. And you can see the year-to-date basket of Asia. And you can see the Philippine peso actually the third after the Japanese yen and the Taiwanese dollar. And these are, haven currencies compared to the rest of the emerging market currencies. So we're still actually third in terms of spot returns when we talk about the Philippine peso. So again, not that bad, but you can see emerging market currencies falling as the rest of the stocks, as the virus fears continue to revive. Now, what are we talking about when we talk about virus fears continuing to affect our global markets here? I just want to pull out Asia. You can see here a sea of red earlier this morning. You can actually only see the Shenzhen Composite in the green here and the Taiwan TAIEX. But the rest, which have been open this morning, are actually seeing declines. This together with U.S. futures also sliding this morning. And on the back of news from Beijing, they have just shut down a wholesale food market after another rise in COVID-19 cases. So again, there was actually the largest fruit and vegetable supplier center and also the housing districts also being shut down. And right now, this is actually following a second wave in the US last week. So there are actually rising infections over in the US in 22 states. And you've got Treasury Secretary Steven Mnuchin saying that despite these rising cases, they cannot shut down the US economy yet again. We will be watching China very closely today. They will be releasing their latest industrial production and retail sales reports today. Now let's take a quick peek at our own bourse. And we are actually opening with losses that are not just mirroring the rest of Asia, but actually even worse. You can see on your screens here how we're sliding back to 6,200 levels. That's down a hefty 3.1% this morning. We are, of course, waiting on a lot of decisions today. You are expecting to be hearing from the President Rodrigo Duterte on whether he will continue to be opening the economy as of today, or we may actually be seeing more restrictions putting in place. You've also got sentiment recent news that we had just reported in One News Now into Rappler journalist Maria Reza's recent conviction of cyber libel. So a lot of things possibly affecting market sentiment. You've also got new coronavirus infections reporting from the DOH yesterday, 538 new coronavirus infections. So there's a lot of things going on. But another thing that analysts are highlighting here is that we had a lot of bargain hunting last week and the week prior, and we might actually be seeing profit takers this week. There might be a correction. Recall that last Thursday, so there was a holiday on Friday, we were actually up weekly by 0.2%. But this, according to Chris Mangon of AAA Equities, investors starting to secure their profits after several weeks of enjoying such substantial gains. They're making the most out of this rally. He says that there is a possibility that the market may have run out of momentum. Now, speaking of momentum, though, you have one major stock actually bucking that sell-off, and that is, of course, our very first IPO of the year, and that is MerryMart. They did, their debut, and this has been watched very closely. And you can see on your screens here how it had listed at 1 peso, and it's now up and has reached ceiling. It's 1 peso and 50 centavos. That is a hefty 50% increase in just the first hour of trading. This is, of course, going to be traded in the small, medium, and emerging board of the PSE. So they have already raised total proceeds of 1.6 billion pesos. They're still actually, what they're banking on here, despite the volatility in the markets, is the fact that they will be focusing on non-discretionary basic goods. So what is their target here? And you can see that on your screens, 1,200 branches by 2030. That is actually a very ambitious plan. But what they're also saying is that they will be building stores in Double Dragon's properties. Now, as we know, MerryMart is, of course, also founded by Ed Garcia, who also owns Double Dragon, and they're looking to have the warehouses and distribution centers in Double Dragon's warehouse complexes. Now, Phil Stocks is actually saying that this price at 1 peso is overvalued, but we might be seeing excitement today. We are seeing it already, but this excitement might be waning. The stock might actually be declining below its IPO price in the long run. But you've got Japet Tantiangquis, of course, from Philstock, saying that there is potential synergy that might be happening between the two companies, and this might actually be very exciting. And Double Dragon, incidentally, on Thursday had actually jumped 11% before the holiday on Friday. Now, more on markets later on in the broadcast. We've got Chinabank, Securities, Rastine, Mercado joining us later on. Okay, let's check in on other headlines we are watching this morning. Now, if there's one other benefit of having the anti-terrorism bill, AMLAC says that that the measure can actually keep the country from being gray listed. Now, the Anti-Money Laundering Council says the bill contains measures which is addressing lapses in the current laws against money laundering and terrorism financing. Now, since last October, the Philippines has been under a 12-month observation period. That's by International Money Laundering Watchdog Financial Action Task Force. And because of the COVID-19 crisis, that probation has been extended until February 2021. But passing the anti-terror bill is not enough. That's according to AMLAC. The country should also demonstrate effective implementation of these amendments before the observation period ends next year. The council said inclusion in the gray list would further hurt the economy that has already been battered hard by the effects of the COVID-19 pandemic. The proposed Anti-Terror Act is now just awaiting President Duterte's signature. Meanwhile, proposed amendments to the Anti-Money Laundering Act have yet to advance beyond the committee level in both the chambers of Congress. The House Banks and Financial Intermediaries panel has said, though, that it will be a priority measure once Congress resumes session, which is late next month. Now, subsidies to state-owned firms surged by almost 600% year-on-year in the month of April. This is after the SSS received funding for the Small Business Wage Subsidy Program. The national government extended over 34 billion pesos in subsidies to GOCCs in the month of April. That's compared to only 5 billion pesos in April of last year. The SSS received the lion's share of that amount at 25.5 billion pesos, which is 74% of the total. This after receiving no budgetary support at all from the national government in the previous 3 months. The SSS is the main implementing agency of the government's wage subsidy program for employees of small businesses. The National Irrigation Administration received close to 5 billion pesos worth of subsidies in April, while the NFA received close to 3 billion pesos. In the 4 months to April, the national government released a total of 70.5 billion pesos worth of subsidies. Lending firms are again being asked to assist the borrowers by offering debt relief measures to cope with the COVID-19 pandemic. The SEC is encouraging financing and lending companies to roll out initiatives that will help ease the financial burden of the borrowers. Now, among the measures suggested are lowering interest rates, waiving or reducing penalties, and offering a payment holiday. Other possible measures are allowing debt consolidation, extending the term of loans, and providing flexible payment schedules. These proposed measures are aside from the mandatory grace period that the SEC imposed on lenders under the Bayanihan to Heal as One Act. The Commission says that while the quarantine is gradually being lifted, the COVID-19 pandemic had a lasting impact on the finances of Filipinos. Hence, it's pleased to lenders to continue to give that debt relief. Okay, guys, so just when we started getting used to a difficult but uphill climb, the invisible enemy, of course, I'm talking about the COVID-19 pandemic, continues to make its presence felt here in equity markets. This virus is just one in a flurry of issues to be digested today. Here to share with us his views. At the beginning of this trading week, we have with us Chinabank Securities' Rastine Mercado. Good morning, Rastine, and welcome to the broadcast.
Morning, Danie.
Rastine, let's kick off with that MerryMart IPO. Okay, I mean, very quick. Did you subscribe to that? What's your expectation? Did you expect that to actually be reaching ceiling earlier on? Is this uptrend actually sustainable?
Well, I guess as you mentioned earlier, the main concern is really to ramp up its store count from 7 as of the start of May up to 1,200 by the end of 2030. So again, there's a lot of execution risk there. Coming into it, we've already flagged that it might be a little bit expensive in terms of PEs. Based on its 2019 earnings, it was at around 270 times at the 1 peso price. So again, now that it's at 1.50, then of course that's substantially high. I think the important part here is to take note of is that other peers, like for example, the likes of MRSGI, whose market cap was around 5.2 billion, has a net income of 700 million pesos. So again, if you look at that, so the difference in net income, so for MerryMart, it's 28. So again, in terms of sustainability, I don't think it's that sustainable, considering that there's a lot that needs to be executed in the part of the company.
Okay, and this despite the fact that they've just announced that they're going to be putting warehouses, manufacturing facilities in the Double Dragon properties. You don't think that this adds to the synergy and the fundamental value? Double Dragon also surged 11%, on Thursday, ahead of this listing today. Did that have anything to do with it?
Well, I think it really they did mention that in their prospectus that they would be looking to expand their geographic footprint across all the regions in the country. So part of that is that placement in Double Dragon's warehouse facilities. So I think there is some synergy, but then again, it's a matter of execution. If they are able to, I think the litmus test here is that if they're able to open the number of stores they're saying, I think that's 30 by, sorry, I think that's 100, sorry, 600 by 2025. So again, how their progress is moving up to that or through the next few years and what the shape of profitability is by the end of this year and next is what's going to kind of drive fund flows and of course sentiment investors towards the issue.
Okay, so it's still a bit too early to tell. If you
Yeah.
just short-term trading for today,
Mhm. Yeah.
it's on a trading halt because it's already breached ceiling. Do you expect
Mhm.
a lot of taking already happening within the first trading day?
Well, I think if it does indeed close at ceiling, there might be some spillover to the next trading day. It might be good to take profit then. But I guess MerryMart is also a beneficiary of a rotation from funds that have been taking profit on index issues and other first, second liners, and then now holding cash, right? So I think it's a viable trade for now. But then again, in the coming days, we do see some profit taking happen.
Okay. Now this excitement does not seem to be spilling over into our broader index. Tell us,
Mm-hmm.
where are we? I mean, the rest of Asia has been looking bleak, and we did see na naman this resurgence, second wave possibly. Is that what's really affecting our bourse today, or are there more issues here? Is everyone awaiting President Duterte's decision, and what are markets pricing in?
Well, again, if you look at last week, the sell-off from the US really came in on Thursday. So on Friday, we had a holiday. So I think there is some spillover from that sell-off coming into our Monday trading. So again, that sell-off in the US was kind of because of a reality check from the Fed, because they did outline their economic outlook for the country. So I guess they're seeing that rates will be near zero up until 2021, 2022. So given that outlook and their unemployment rates being the high single digits to the end of the year, that might have caused some concerns on some issues, specifically those that have rallied in anticipation of quick recovery in their businesses. So moving into the local bourse, obviously, we do have those same concerns. It's a mix of profit taking. There is the concerns on the resurgence of cases globally. So again, as we've been mentioning, the situation around the COVID-19 pandemic dynamic. Remains dynamic. So in that sense, since you have a run up, anything that might be adverse to a positive development may be taken as a sell on, as a reason for the market to sell off or take profit. Then again, any positive news given the run up of more than 15% can be taken as sell on news as well. So I guess really it's just a matter of taking profit now, which is certain, versus betting more on these issues, especially that the mounting expectations of the recoveries are continuing to go higher.
Okay, so it seems that the optimism is again being marred by all of these new issues. I mean, there was already an uptrend for a couple of weeks, and now we're
Yeah.
seeing it. Just to show our viewers here who are driving down the bourse, and you've actually got Aboitiz equity down 5 and 7 tenths of 8%, but also some the ones that had rallied, as you mentioned, you've got URC down by 5%. SM Prime, DMCI, LTG Group. These were as the ones that were being heavily picked up. When this rally had legs, and they are actually the ones being reversing course right now. Let's talk about some sectors here. I just wanted to touch on the property space because there are
Mhm.
some reports that are very conflicting. On the one hand, you've got remittances falling worse than expected. The World Bank expecting it to be even bleaker. And this is just in the first quarter, diba? So second quarter might be even harder. But you've also got, at least this is from Sylvester Bellio, saying that you actually have a lot of companies out, offshore, starting to build here in terms of outsourcing, and that might actually be benefiting the sector. Is this something that makes a positive case for properties?
Well, in terms of property, obviously we do continue to favor those that have recurring earnings from their leasing businesses. So we have office retail. We have office and retail. So for those businesses with higher exposures to office spaces, then that might be a positive development. Considering that obviously we already have the overhang of concerns from POGO uptake, and as well as existing companies staying in these locations. Same time, you still see some supply coming online, so that might play into the whole dynamic of where of how these businesses will run. But then moving into the larger space, the more holistic space in the property sector, those with bigger exposures to residential businesses, so which were especially those that were primarily fueled by OFW remittances and middle income wage earners. So those whose target markets are those profiles might see or experience some slowdown, especially since again remittances have slowed down already in March. The Bangko Sentral de Pilipinas expects it to clock in around the 4% contraction, with the World Bank expecting even a larger contraction. So I guess how that works or how that pans out moving forward will ultimately drive to a certain extent the recovery in property companies with huge real estate exposure, residential real estate exposure.
Okay, so you're still actually bullish on recurring revenues, despite the fact that a lockdown had happened. I mean, it's being lifted now. We're still in some sort of ECQ or GCQ. You're still bullish on that actually seeing a recovery. Can you also link that to possible issuances of REITs that are still on the table? You've actually got, just to short years here, Double Dragon surging percent and bucking the sell-off of the rest of the space. They've got a REIT on the table planned. You've got also Ayala Land. Is that actually something that you're looking at as positive for the industry?
Well, the good thing for REITs is that essentially it's a recycling of capital, right? So it's unlocking that the capital that's in these properties that they have, and then turning that into other projects that that could be value accretive to the whole company. So in terms of the individual investor, obviously what you're looking for in REITs are the yields, right? So as for so long as if you have interest rates now that are pretty low, and you have yields in REITs that are pretty high, obviously the higher yielding security would likely draw some attention, especially from long-term investors.
Okay, so if that actually yields higher, and speaking of yields, there was a report, and this is from Bloomberg, that the biggest companies in the Philippines need to repay the most debt ever next year. And actually, I just want to highlight that $8.3 billion in corporate bonds and loans to mature in 2020, the second half, and $16.4 billion. That's a record that is due from the biggest companies in 2021. Is there any risk at all that there will be, a default in the banking space because of all these bonds? But on the other hand, there might be a lot of refinancing going on, but with yields very low. Is that something that investors like us, instead of going to equities that are so volatile, should be looking at?
Okay, so in terms of the loans that are going to be due over the short term, obviously we do see some corporates already picking up their loan issuances. So I think they do have the option to refinance, considering that rates are significantly lower than when they did first issue. So on that space, I don't think it's a big problem in terms of being able to pay back those debts. In terms of the banking space, again, we do have some measures that are currently in the pipeline. I think that we have FIST, so that's where banks can move their non-performing assets into asset management companies. So that is pending approval. So given that support, then I don't think there is significant risk to the banking system given that. So in terms of an individual investor looking to invest in bonds, well, obviously with rates being so low at this point, it might not be a lucrative investment to get into bonds right now. But then again, you have to look at it holistically from a portfolio management perspective. So just between equities and bonds, obviously bonds, you have recurring earnings, they're pretty stable, but then your yields are pretty much low. But then if you look into equities, obviously the corporates that will be issuing these bonds will be placing the proceeds of such issuances into projects that might be value accretive with higher yields for them. So if you're an equity investor of these listed firms, then the return for you can be much higher than what you're getting if you were a bondholder. But then again, the risk profile is different. More volatility is seen in the equity space, as we've seen. We had a run up over the past few weeks, and now we're selling off or profit taking or correction. So again, the risk profile is different, but then if you look at it holistically, then I think both have a place in everyone's portfolio.
Okay, so you're saying that we still have a lot of cushions when it comes to the financial sector, and this despite the fact that this from Business World's latest quarterly banking report, you've actually got lower profits in this first quarter of the year, and this doesn't even take into account all of these defaults that might be happening and all of these things going forward, and even the loan growth, despite the triple R cuts, despite the interest rate cuts, has actually grown less than we've seen in previous quarters. What's your outlook on the banking sector? I know you're in China bonds, so it's very difficult to give an opinion, but just generally, how long is it going to be taking for them to turn around this sector, given that there are still all of these risks on the table when you talk about defaults and asset quality?
Well, I think the basic point here is that the banks should underpin or help underpin the recovery, because they're supposed to be introducing all this unlocked liquidity into the market. So again, if you're seeing consumer, so that's why we've been there is an encouragement to provide more liquidity into the market. So I guess in terms of banks, there's not too much risk. Obviously, the guidance on credit costs is going to be important. Looking into the full year profitability guidance, so maybe also moving into next year. So again, all of this is very contingent on further developments. As I've mentioned, there is also some measures in legislative currently making its way. So how all of these will affect financial institutions obviously is going to have an impact on bottom line moving forward.
Okay, and finally, before I let you go, Rastine, any bright spots here that you're looking at, and also are you revising? Even I know it's very hard to have a long term call or year end call on the index, but now having been in a GCQ, and now there might be a second wave. This seems to be expected already when you look at global cases. Is too early to be pricing that in already, or are you actually expecting a bigger hit than what we were seeing just 2 weeks ago in terms of expectation?
I think honestly, in terms of if we're going to see the levels that we've seen in March, I don't think that's going to happen. Although we might see some retest of support somewhere on lower back, probably in the 5,000s. So that's also on the table. So obviously, how it pans out moving forward is going to be important in determining what the trajectory is. In terms of expectations for the PSEI, I think our baseline around five, our bear case around 5,400, which is pretty much the lowest of the low already in terms of valuations and PEs. It's still pretty much higher than where the floor was back in March, where it bounced, right? So I think its markets are now being less emotional about the possible downside effects, and they're just really pricing in what the path of the recovery is. So given that there's more certainty now than there was before, then I don't think that an abrupt sell-off like that can happen again. But then again, if there is a significant resurgence in cases, which would lead to impositions of further lockdowns, then again, that's another story. But then I think for now, we're really banking on the slow recovery of the economy already.
Rastine, just last question on the chart that you can see on my screens here. From a technical perspective, can you actually be relying on that? I mean, we had broken through the short-term, moving averages at least. We did that twice. Do the technicals tell you anything? I mean, you said everyone's trading on sentiment right now. Everyone's trading on buy on good news. But is there some sort of trend that you're seeing?
Well, in terms of trend, I think the upward momentum is still there. Obviously, today was a litmus test of whether or not that's sustainable. So in terms of technicals, we're still pretty much on the space for a further rally over the short and medium term. So that's the next few weeks. If the pullback continues, we see 6,100 to 6,250 as possible junctures of support that we could see a bounce from. And then obviously after that, it's a matter of whether or not the resistances at 6,800 or 7,000 will be broken.
Okay, so pretty broad range there in terms of what the government is also going to be deciding today. Just to highlight that their index is down by 3.2%, trading at 6270.02. Thank you so much. That was Rastine Mercado of Chinabank Securities. Thanks for joining us today this
Thanks,
morning.
Dan. Thanks for having me.
And guys, that's a first look into the business day. Today is Monday, June 15, 2020. Catch us again tomorrow morning, 10:30 a.m. I'm Danie Laurel, and we are One News.